Good morning, good morning. Hey, Kevin, how are you? Hey, Donnie. What's up, Raj? And welcome to everyone on YouTube. Hey, Johnny, what's going on? All is well. Last day of my move. So I'm gonna get you guys set up and ready for the trade of the day and back to moving. Hey, Moran, how are you? Good to see everybody. Let's get into it. So our overnight inventory is short. We ran the market up at the end of the day yesterday. Right? Typical, tried to high close it. Sorry, stupid thing. So we ran it up at the end of the day. We tried to high close it and couldn't take out the 5600s. So it sort of sold out a little bit into the close. Now, overnight inventory is almost 100% short, except for like one or two ticks, which means that all of the trading is underneath the previous day's close. We've already had a correction to overnight inventory. So if I go click this, you'll see you had the short inventory, there's the correction to it, and it's still correcting higher. So this is pretty much normal market action. Okay. So what normally happens is when a market sells off the previous day, at night, the dealers and the wholesalers will take that product and try and sell it higher and get some cash, right? Because they have to take in inventory when the market sells off. When the market goes up at the end of the day, the people who are caught short underneath certain levels will come and bid the market at night to try and close off their positions or de-risk. Okay? So that's basically what's going on, right? And that shows normal market mechanics, right? That's what normally happens in markets, right? That's corrective action to inventory. Now, when that corrective action doesn't happen, it tells us that there is change, right? So we need to change the way we look at things. So far everything's normal, right? I want you to take a look. The other thing that markets do is they collect inventory underneath VWAP. Market's been underneath VWAP pretty much all night. You see? If I just got rid of the drawings, you'll see that the market's been underneath VWAP the whole night. And now we're going to take this inventory and we're going to sell it here. Okay? So that's why markets use VWAP. They try and acquire inventory underneath it, sell inventory above it for profit. Yeah, I don't know about tomorrow, but this month it'll be nice if the market starts to calm down and this tariff snowball fight is done and we can just get back to work. It's been a weird month. It's been a very strange month. Um, kind of it was like drama that was created to flush everybody out. If I had my tinfoil hat on, right? That was a margin flush. I mean, that was a huge margin flush. We took everybody out who trades on credit. Anybody who bought stock using margin, they got margined out. People who bought stock with cash, which is harder to do, they held their positions. So very different markets that we have now as we did than we did 10 years ago, 15 years ago. They've changed significantly. And now we've got a little bit of boring distribution here, folks. Remember? So we're taking this cheap stuff down here. We're selling it here. But there's not a huge amount of buyers at 2:30 in the morning New York time. So they're selling it for what they can in this little sort of chop. Let's go take a look. You can see the overnight point of control is down here at 58. Right. My balance zone for the night is 55, 54 3/4 to 59 quarter. Double it to 68 quarter. Double it again to 86 quarter. And once we are above, if we can take out these stops, yep, that's exactly what happened, Johnny. I call it a margin call robbery, just like COVID. I think COVID was one of the largest margin call robberies I've ever seen, where they just flushed the market so hard. And this one was the same. We had 500-point days up and down. And first of all, when you have 500-point days, it really screws up a lot of people's portfolios. The other thing it does is it induces the dumb money to trade. And because they see huge ranges and they think they can make a lot of money, and they end up blowing up a lot of accounts, that kind of thing. Right? So it's basically a huge cash grab, right? They sell you product all the way up, then they flush the market, then they have all the product and all your money, right? They reset the cost basis, right? You ever read Education of a Speculator by Victor Niederhofer? The very first chapter, he says, on the way up, I will take your money and give you goods. Then when you can't hang on to those goods anymore, I'll take back your goods for less money. At the end of the day, I will have all your goods and all your money. Right? And that's how the smart money operates. Right? Dumb money chases price. Use all those excuses like FOMO and tilt, and just basically excuses to not have any discipline in business. Right? That's why what we do here at the Trading Syndicate is we want to teach you to go from being dumb money to smart money. Because nobody is just born with market intelligence. I have never met anyone who's naturally gifted as a trader who can just sit down and start making money. Never seen it. You have to learn. Never seen anybody just go, "Oh, okay, I'm going to trade," and next thing you know, the only time I've ever seen that is on that movie Limitless, where the guy takes the pills and all of a sudden he's a genius. But never seen that other than a fictional movie. Yeah, like even in sports, you can't like say I wanted to be a quarterback and I can't throw a football. Well, I can't really blame that on on football psychology, right? You know, I'm a quarterback and I don't know how to throw a football. There's no amount of football psychology that's going to help me. I got to get out there and practice throwing the ball, right? I mean, it just kind of makes sense. It's like, you know, what in the movie? Yeah, yeah, he uses it. Yeah, I've never seen that in real life. That's what I'm saying, right? You want to be a race car driver, there's no amount of racing psychology that is going to prepare you without doing the work. You got to do the work. I'm not bashing trading psychology. I just think it's really used as a crutch for bad business behavior where you would never do stuff like that if you were like if you're at your job, right? Say you work at McDonald's. Are you going to start FOMO making fries? I'm just going to start making thousands and thousands of orders of French fries. They fire you in a second. Like, what are you doing? Like, seriously. I'm going to tilt, so I'm going to, like, take a baseball bat to the milkshake machine. That just doesn't happen. And, like, you got to, all of these words like tilt and FOMO are just excuses for having no discipline. Okay. Let's see if we can stay under 68. Yeah, revenge flipping burgers. Exactly. Yeah, it's just an excuse. Now, listen, if you're a portfolio manager and you made 7 million last year and you're having trouble making your numbers, there might be some psychology to that. And that's why they invented trading psychology. And then, of course, retail people caught a hold of it and went nuts with it as an excuse. Oh, I blew up 6 accounts. Oh, it's trading psychology. No, it's because you're a dumbass. You don't know how to manage risk. uh, Sometimes you just have to admit you're doing stupid crap, right? It's okay. We all have those moments. God knows I've had them. Let's see. Where are we going to stop selling off? Here? Yeah, Terrence, the whole wholesale price right now is under 59. So they could effectively sell this market all the way down to 60 and still be in profit. Like so. Now let's see if it holds this arrow here. Oh, that's another sleepy Globex, folks. It's a sleepy Globex. I don't have moving averages, but those are VWAP lines and standard deviations. I never, I never gotten into the moving average thing. Just because I didn't know which one to use. Everybody has a different one. This one's got an EMA, this one's got an SMA, and this one's using the 8, the 9, the 16. I could never. I'm like, which one do you use? Well, then they're these things, and then they have to cross over, and I'm like, oh, okay, no, it's just too complicated. Just tell me where the bid is. For God's sakes, just tell me where the bid is. I can work off the bid, right? There's a bid at 66. So if I was short 69, 68, I know to cover at 66, right? I don't need 20 million indicators to tell me that. If the market's bid 66, don't short 66. Does that make sense? Right? Does that make sense? Right? Like how much more simple does it have to be? Like if you know the bid's at 66, don't frickin' short 66. Right? And if it's at a decent level, you might go long 66, but if you know there's a seller at 67, is it really worth taking the trade? Right? And you don't need 25 moving averages to figure that out. VWAP is an institutional benchmark. Right? No, it's an institutional benchmark. You guys in the YouTube chatter, I don't know what you guys are smoking. But maybe read up on it. It's an institutional benchmark. You acquire positions below it, you sell positions above it. I don't know what you guys are reading or what you guys are smoking, but it's a simple business, right? You don't need 300 moving averages and weekly consolidation, all that stuff. You're just going to confuse the crap out of yourself. Keep it simple, right? Just keep it simple. What's up there, Terrence? Monday? Monday question mark. Could Terrence, I'm lost, brother. Could you like maybe type it out what you're trying to say? Monday inventory. Why do I not trade NQ? Because I don't know the market. I've never watched it. I traded it once when one of my friends got into trouble and got upside down, and I helped them get out of a bad trade. And I looked at it when I was trading, and I would, why the hell would I want to trade this? It's too thin. Terrence, sorry, Terrence, I'm missing your question, brother. The inventory from Monday? All of the inventory is really kind of underneath us right now, right? If we go and look at a longer term chart, something that you guys need to be aware of is that we've had days now, we've had higher lows, right? So when you have higher lows like that, it means that the buyers are chasing the sellers up. It's a common month end thing, right? Ever since here. I don't know if you're on YouTube. So we are trend up into the last day, trading day of the month. Yeah, I don't. Hey, if you guys want to trade NQ, please be my guest. But you know, hey, Mark, what's going on? How you doing? This is like watching paint dry. I like just to trade one market. Keep it simple. Trade one market. Okay, what's gonna happen now? We still have 8 minutes until London opens. All the stuff's packed. I'm just moving. As soon as we get off this call, just moving. Yeah, I would. If not for you guys, I would not be on the screen right now. And if London opens and it's quiet, we'll shut her down a little early. Taking a look at the longer term chart here. I think as we come up into that 5600 area, there's inventory here. There's product. So I think we're going to have resistance. And we'll see. Either we took all of this and flushed it out hard and we'll get back to 5692, 5780, or I think the more plausible is to go and test this 5428 again. I would not be surprised if we went down here and tested this and tried to build some sort of trading range before we did that. But let's see. Right, I'm not a fortune teller. I've got to wait for the order flow to come in. What are my thoughts on HIMS? What is that? For $35 paper. So it ran from what, 28 to 30? Well, end of the month is the best time to run a short squeeze, right? So put out some news. Nobody wants to short a stock at the end of the month. Only crazy people do. Oh, here they are. They're going to sell that drug for weight loss. Yeah. What's the float? That's a big float. 192 million shares in the float. Only 11% held by insiders. Oh, it's 80% institutionally held. Easy to squeeze. And 31% of the float is short. Yeah, that's who cares about if they're oversaturated? What you care about is the stock and the structure. That's one thing you guys got to learn. It doesn't matter what the news is, it doesn't matter what the industry is. If the stock is structured that it can support a short squeeze, that's all it's about. So if you have a stock that has 80% of the stock held by people who aren't going to sell it, and 30% of the float is short, there should be some light bulbs going off in your head right now. If there aren't, you shouldn't be trading stocks. Learn structure. How a stock is structured affects how it trades. A stock that's loosely structured will take a lot more buying to move up. A tightly held stock that's structured very tight, where the paper is locked up, will trade very differently. But when a stock runs at month end, you've got to be nervous. Because is that month end buying just short covering? Or is it going to stick through next week? So if you're a trader, that's fine. Right? But if you are investing, it's a bit of a different story. Yeah, I haven't looked at equities in a while. I haven't even looked at what's moving and shaking into month end. Let's see, market movers yesterday. Tesla, Nvidia, Palantir. Oh, look at this. Nice little 74-cent penny stock that traded $445 million worth of stock in one day. Now that's how you make money. If somebody would have financed that at a nickel. Interesting. Exactly. Exactly, Terrence. Hey, LC, what's up? Insomnia again? Can't sleep? Yeah, I think we're gonna. There should be some. There should be some peanut butter in those shelves around 5,600. It's been a hell of a run. I mean, from 51.27 up to almost 5,600. That's not bad. When did that move start? The 21st. It's not bad. It's not bad. At least they made their month look a little better. I mean, it was pretty dismal when it was pretty dismal when we were under 5,000. Right? That was a little ugly. Gap down Monday. You never know. God. Okay, point of control moved up. Good distribution. Finally something to talk about. London's opening. Now, if London can't get lower, it's going to take out that K high and then it's going to gun for that 76 area. Yeah, the first week of April had fund managers going back to church. Sellers still there at 72. Yeah, I never think about the JP Morgan caller. I don't, I'm a day trader, so those things I don't pay any attention to. But not to discourage others from doing it, how are you going to, all of that information is great, but you just got to know how to use it to make money. Right? Yeah. Information is great. We have a ton of it. But what can you actually use to pay your rent? That's the thing. And how much of it is useless? Right? Like right now, you know that there's a seller here and here. That's useful information. You know that they stopped selling here. That's useful information. Right? We want to use practical information when we're trading. Right? Now, if you're sitting around pontificating and smoking cigars and drinking scotch with your buddies, that's a different story. But when you actually want to go make money, keep it simple. Right? Yeah, Adam, that means nothing to me. Thanks for typing that all out, but absolutely meaningless for me. I want to know right now, right? I want to know right now whether that 73 seller lifts. Know what I mean? If I'm long 70, if I'm long 69, right? I want to know, should I get rid of my position at 72 and three quarters? Or are those sellers going to lift up and print the 74s? That's practical information. Right? So right now it's 2:30 in the morning, 3 in the morning in New York, and I see that there's a 72 and three quarter seller. So if I was long 69 and those sellers aren't lifting up to 73, 73 quarter, well, there's no reason for me to be in the trade. Does that make sense, folks? Right? So what we try to do here is we try to give people information they can use to actually make money in a simple, uncomplicated way. Because markets were simple and uncomplicated, right? And then they started giving you guys all these indicators and all of these things to watch just so they could baffle you with their BS. You get all turned around. You don't know which way is up, which way is down, right? Is there anything happening in the middle of the year? Not really. I mean, there'll be another quarter, Terrence. I use Sierra chart. Yeah, I've been using Sierra chart since 2012. Um, that's pretty much it. Yeah, I don't use footprint maps at all. If you can, if you can get information just using this, the less the better. Just the less that you need. I know, I can buy some here, put my stop here, sell it here, right? That's really all I need to know, right? And I need to look at 20 different charts. The less you look at, the better you will execute. The more things you need to hold into your head, the worse your execution is going to be. Okay, today is month end. Today is the last trading day of the month. Yesterday was T+1 for equities, Terrence. Today is the last trading day of the month where market makers square off their books. Well, folks, I think you guys are out of questions, and it's pretty slow here. I'm going to shut it down a little early. And we'll be back at 9 o'clock for the pre-market. I'll do an hour then. And hopefully after tomorrow, things get back to normal with the schedule. Thanks, everyone. Stay out of trouble. And we'll see you in a few hours. Bye for now.